Okay, let's just give it a few more minutes for people to settle in. How are you guys doing today? Hi,
Hi.
good to
We're
see you
good.
all.
We're be in the middle of tax season. I don't know. We're as good as we're gonna get, I think. I don't know.
Yeah, well, for majority of our audience, I'm sure people are still settling in. They all know who you are, but for the greater good, let's just get our introductions out. So I'll go first. I'm Smita Paul. Nobody is substantial as compared to these four stalwarts here. I'm just the host and moderator and will try to smile as best as I can. And moving on to the next pretty lady here, Shauna. Please tell us about yourself.
Hi, I'm Shauna the Tax Goddess. I own Tax Goddess Business Services. So I am the head CPA here, and my passion is saving people a bunch of money. So I really quite enjoy what we do. I think we're a little over 1.2 billion so far, and I know we're right in the middle of delivering plans. I just delivered one the other day that was 96 million by the time the guy turned 65. So I do love what we do. It was fun. So.
Awesome. Thanks, Shauna. Tanushri.
Yeah. I am Tanushree. So I'm more into tax preparation alongside planning, more of reporting what you do all through the year and correct reporting and how we can save you with little minds. So yes, even I share the same passion as Shauna does of tax savings and giving the best of the services to the clients. Yeah. Hi.
Ooh, thank you, Tanushri. The audience already loves you. Now, moving on to the men. Raj, why don't you go next?
Thank you. Yeah, my name is Raj. I am the tax planner at Tax Codes. I am plan writer. I'm senior most tax planner at this point. So my business is to save the most for our clients and provide them the most strategies, most applicable strategies, which is applicable to them to save the most. So yeah.
Thank you, Raj. Shubham.
Hello everyone, Shubham's the name, 4 years in the game. Tax planning and strategizing is the aim. And sidekicking amazing Shauna that from the Tax Hall of Fame.
Ooh, we
Wow.
have got some rap right there.
I was
Ooh,
about to say Shub da Bomb. If y'all don't know his name, around Tax Goddess, Shub da Bomb. If you want to check out one of his amazing raps, check out the YouTube channel and look for the Basis rap. It's one of his most recent. It's pretty awesome. So.
yay. So, thank you for that introduction. Audience, for those of you who are here for the first time, thank you for taking the time out to come and join us today. For the repeat audience, thank you. We couldn't have come this far without you. We started with a single digit audience and now we've moved to double digit, and very soon we will graduate to being three digits in this room. So please use the Q&A button right at the bottom of your screen to post your questions, and we will do our best to answer them in the scope of time that we have. So first things first, if you didn't know, you can still go and post your question for the forthcoming session in the FAQ section of our website. So you go to Tax Goddess website, you could utilize the FAQ section and post your question. If you haven't done it so far, please do it. So first things first, this is officially the last live Q&A before this quarter ends, quarter Q1 of 2024, not entire 2024. Don't get me wrong. So quarter one of 2024, we would like our panelists to tell us if there were any major announcements that you would like to reiterate for our audience. Shauna, why don't you start?
I was going to say there are tons of them. So, and side note, some of these have already had videos filmed on them. So again, YouTube channel, if you're not watching that, to get into more detail. But the biggest ones that we've got right off the bat, we have storms in Alaska, storms in California that have happened. So right now, I think it was San Diego, right, in California, and in certain areas of Alaska, you have extensions of deadline to June 30th, July 15th. So definitely be taking a look at what state you're in and whether you were impacted by any of those storms. You do have extensions of both time to file and time to pay. And the other big one that really caught my attention was the IRS is definitely hunting down some cryptocurrency people. They believe that the cryptocurrency investors are not paying all their taxes. So they have actually hired an external, they didn't want to call it private investigators, but effectively an external private investigator team to hunt down their words, hunt down people that are doing cryptocurrency and not properly reporting it. So of course, if you're a client of Tax Goddess, you're definitely being properly reported. We ask so many questions, but if you've got any friends that are in crypto and they don't know what they're doing, this could be a big, bad, nasty bite for them if they're not ready. So
That's scandalous. Ooh, scary. Right. Tanushri, anything to add? Raj, Shubham, please chime in. Any other announcements before we start taking our questions? Particularly, where you want to lay down a cautionary advice.
It's more of an upcoming deadline of 4:15. I'm sure everybody would be aware that 4:15 marks the deadline either to file your personal tax returns by 4:15 and pay the taxes, if not paid for 2023, whatever are residual taxes, if you have paid the quarterly estimates for 2023. The IRS gives you an option with the states to extend your tax returns beyond 4:15 if we file the extensions on 4:15, but that does not give you extensions to make the payments. So 4:15, you make the payments for 2023 and extend your tax return, which gives you 6 months to file your personal taxes. Now, 4:15 is also important for two other things. For 2024, it marks the first payment installment of your quarterly estimates for federal and for your states. So if you owe any taxes and your CPA has already given you the vouchers, so 4:15 would be the deadline to pay your first installment for 2024 quarterly estimates. So this is something which is upcoming in next 2 weeks. So be prepared.
Thank you, Tanushri. I'm sure the audience here is taking note. Since you mentioned 2 weeks, now the radars would be on. Absolutely. Anything to add, Raj, Shubham, before we move on to our next section of taking the questions?
Yeah, so a few more things, two more changes, coming in IRS and recently, and it's not started, right? So IRS is gonna provide reminders to those who has not paid taxes for 2020 and 2021 tax year so far. So if you have not paid, probably you will receive a notice or document from IRS that go ahead and pay the taxes immediately. So yeah, make sure you are on track, you pay your whatever dues, or if you have any questions, reach out to your CPA or whoever, right? Second thing is ERC. So ERC has few things going on at this point. So voluntary disclosure program is going on. So maybe if you are not eligible but you got the ERC thing, you have to reach out to them and either repay or whatever documentation you need to complete, you have to complete it. So yeah, two things in my mind so far.
Thank you, Raj.
I want to tack on to Raj's thing. If you can't afford to pay your tax bill, make sure that you're working out some sort of plan with the IRS. Do not dig your head into the sand. Work out a payment plan, get on an offer in compromise. There's all sorts of things you can do, but do not dig your head in the sand. That'll get you into more trouble. So reach out to your CPA, your preparer, to us if you need help, but make sure you're getting some sort of plan in place with the IRS. They get rather nasty when you owe them money. So, yeah.
Ooh, well, yes. Shubham, anything to add?
I would just like to tell everyone who is watching this webinar that like you scroll Facebook, Instagram, TikTok every day, same way, always go to the IRS website because they post recent updates there, and just keep checking the website for any of these updates that might be applicable to you.
So
Or
true,
check
Shubham.
our webinars.
Yep.
Absolutely. Absolutely. Thank you, Tanushri, for making my job easier as the hostess. Thank you so much. Appreciate it. So we already have a question, and audience seems quite excited. The first question is, for an S Corp, do we have to put your medical insurance on your W-2 to use it as a deductible expense? And do you need to do an accountable plan to reimburse expenses you pay related to your business? Do you want me to repeat the question?
Two separate questions. I heard two separate questions. So maybe we can hit the first one, then we'll hit the second one.
Sure.
So the first one was, if I am an S Corp, do I need to put my medical, can you say it again, the medical insurance on the W-2 to take it as a deduction? Was it the insurance?
Absolutely.
Okay. So the answer here, the most famous answer in tax is it depends. Okay. So are you the owner Are you the spouse of the owner? Are you somehow related to the owner, like children or parents, right, that are on the S corporation's payroll? Just because of the nature of the question, I'm going to assume that yes, you are. If that's incorrect, update us in the questions, okay? But I'm going to assume that yes, you are. Yes, the answer is yes. If you are the owner, the spouse of the owner, related in any way, parents, children, whatever, if you're related in any way, the medical insurance does need to go on the W-2. Otherwise, you will not be able to take the deduction on the 1040. So, and then part two, sorry, can you read part two again?
Sure. And do you need to do an accountable plan to reimburse expenses you pay related to your business?
Oops,
Who wants to answer? Camille.
Yes, I would say yes, but accountable plan is just a method or a device that you can use to get those expenses reimbursed. You can also use other options that are also easily available. You can also use a simple Excel spreadsheet, but overall, yes, it gets covered in the accountable plan section. And yes, to get those expenses reimbursed, you need to have an accountable plan. And instead of doing it like annually, you should go for quarterly reimbursements for every quarter.
And I want to clarify here because Shubham, I think you're talking about the actual method of running the calculation.
Yeah.
You can use a spreadsheet, you can write it down on paper, like the method you calculate doesn't matter. But if you don't have an actual accountable plan, like there's a one-page document that is an accountable plan document. If you don't have that, your reimbursements are not deductible. So it's a two-part thing. You have to have the plan and however you're running the calculations of things you paid personally that should be business. So ordinary, necessary, and reasonable as far as those deductions. So, yeah.
Thank you, Shubham. Thank you, Shauna, for answering.
Raj, Tanu, anything to add?
Yeah.
Yeah, I mean, the same thing, right? The accountable plan is divided into two segments. The one where we actually compute whatever we need to reimburse. The second part is, the agreement kind of thing, which you are making, with whatever the company is, right? So if we don't have a proper, documentation, these kind of documentation, it's not counted as a reimbursement, right? And you cannot claim those expense on your business side. So we have to be very, particular in case of documentation every time whenever we reimburse.
And the audience member who asked this question, they just confirmed, yes, I'm a sole member. I don't have the document.
Wait, don't have the document of what? Of the I think whoever is answering, whoever. I'm a sole member is related to the S Corp. So the insurance question being on the W-2, I think. Oh, for the accountable plan. I just saw it come in. Yeah, you definitely need the document. I know that that's one of the things that Tax Goddess, it's a lead magnet for Tax Goddess. So if you're willing to give us your information, we will send you a draft copy of an accountable plan. So maybe, Smita, we can make sure that our team gets that out to the audience today, the connection of where to get that. So we can do that. Happy to help.
Sure. Anything else before we move on to the next question? I think we've answered it pretty much from all directions. Cool. Okay. There's one more question that came in from one of our existing, people who we know and who have been frequently participating in these live Q&As. So what has changed that we need to be working in our strategic tax coaching plan that we didn't have time to implement and put into play? And how do I work smarter this year than last year? There are two more subsections to this question, but could we first answer the first bit of it?
You saw me get a big old smile. The biggest thing I can say here, right, is that one of the main reasons people don't get a chance to implement all of the strategies is because they didn't have time. Most people reach out to Tax Goddess or a tax strategist at the end of the year. They go, oh, I'm making a bunch of money. I should do something. But that means you didn't get your to-dos, your tasks, your strategies until October, November, December, right? It's sometime late in the year. So one of the things that you can do to help yourself the best is start later or earlier in January. Start January 1st. Basically, start the soonest day you can. Start yesterday is really what I mean. The sooner you can start, the better it is. The other thing really triggering me is that there are differences every single year in the limits of things. So for example, Raj showed like, for example, I know the amount you can pay a child just went up this year. What's the new 2024 amount?
I think it's 14,600.
14.6 plus the 7,000 for the IRA, right? So we're almost at 21.6. Is that right? Yeah,
yes.
21.6. So those numbers of strategies will change every year, right? What other strategies change limits, guys? The
HSA
IRA, paying kids?
HSA contribution limit changed.
Yeah. FSA would change.
Yeah.
What else changes
Yeah,
every year?
tax rates every year, no tax rate change.
Tax rates, of course,
Yeah.
change. The standard, the standard amount you can pay the kids change. So I think one of the biggest things, if you're looking at your tasks, is make sure you're looking at the task and saying, okay, ask back to your team, did this limit change for 2024, 2025, 2026 moving forward? So.
Since you are here, and if you're listening us, answer your question, please ask any follow-up questions that we might have not answered in this part. Now there are two more subsections from the same person. Did 100% section 179 get passed?
To my knowledge, no. It's still sitting, the bill is still sitting with the House. It went to the Senate, but yeah.
Okay.
So we're still waiting.
Okay. And the last bit from the same person is, with payroll for our kids, should we be paying them each month, or is it okay to pay at the end of the year? Who wants to answer? Guys?
Raj, go ahead.
Yeah, sure.
Being awfully quiet, go ahead.
Yeah. So, paying the kids, normally, it's a part of strategy, right? And you can pay monthly, you can pay quarterly, you can pay, twice a year, or you can even pay, end of the year, right? It depends upon like how you needs to pay them. If it's completely a strategy, still you can pay twice a year or every quarter or whatever, right? But it depends. It completely depends upon how frequently they need to pay their expense and all these things, right? So yeah, I mean, it completely depends upon how frequent you are looking to pay, to kids. Normally, I have seen people paying to their kids in the month of October, November, December, because then they have clear picture about their business and what's their income and all these things. But yeah, it completely depends upon how frequent you are looking to pay.
Thank you, Raj. Anything else to add? Shauna, go ahead.
Not everybody pays their children also for more like a salary. Some people will pay their children based on projects. So for example, if you're paying your kids to be the model of the child image on your website, it may be $5,000 today for that specific photo shoot, and then nothing for 4 months. And then you do a different project or a different photo shoot or something like that. So yeah, it really, the timing of when you pay somebody really should be commiserate with what work they're doing, right? And I think the biggest thing here is that the IRS loves, one of their perfect things, and we hear them say this all the time, the IRS loves a third-party arm's length transaction. So if your child were to go work for somebody else, would they accept to not get paid until December? No, they would want to be paid when they did the work, right? Within a week, a month, whatever kind of normal payroll schedule would be. So you can wait until the end of the year. The IRS likes to see transactions and history and why, how did the hours that the child put in tie to the payment that you're making. We often, as a CPA firm, we will often give a little bit of an exclusion for the first year, right? You didn't know, your child's been doing all this work, but you didn't know that they should be paid. So we're going to run a catch-up payroll at the end of the year. But yeah, I would like to see it commiserate with whatever's happening, with whatever's actually happening. So.
Thanks for that. For those of you audience who came in a little late, feel free to use feel free to use the Q&A icon right at the bottom of your screen to send us your questions. We'll be happy to help you. Okay, moving on to the next question. What is the best approach for record keeping to ensure smooth tax preparation? Raj, why don't you answer that?
Yeah, and it's a very relevant question because right now we are in tax season, so we need to submit lots of documents to our CPA to complete the tax return, right? If they are filing, even if they are filing extension, still we have to provide most of the information so that they can compute, the estimated taxes which you needs to pay, before end of the extension deadline. Now, record keeping may include lots of things. I would say all the things that you think you have to, maintain in order to, whether you need to, smoothly run your business or you need to, get some earnings or whatever documents that you are receiving from anyone, right? It's your employer, it's your, HSA company, even your bank records, the bank statements that you need to maintain in order to complete, all the bookkeeping and everything. So you have to follow all the continuous, ongoing procedure in order to stay on track every time, right? So it's not like you just, reach out to your CPA and provide all the documents in the month of December to go ahead and complete the bookkeeping, right? That's not a good idea, or that's not a good plan. Really works, in order to file a proper tax return, because that way you will. There may be a chance you will miss lots of strategies which you need to complete, by end of the year or during the year. So keep updating on continuous basis, is really important thing. Now, sometimes, in order to focus on filing, sometimes, you also have to file quarterly tax returns during the year, not after completion of tax year, right? For example, you have to file payroll documents for payroll tax returns every quarter. So those things should also be, filed on time every time, and you have to maintain those records for you, right? So you have to provide this information to your CPA on continuous basis. In addition to these things, I also recommend you continuously monitor your financials and provide copies to your CPA so that they can at least check, every quarter whether something doesn't make sense, something needs to make change. At least, they can go through and make some sort of small audit, inside your documentation, and suggest you that, yeah, go ahead and make, these changes so that it will not come up, once the year is ended, right? Because once you lose the deadline, once the deadline is over, it's really hard to come up again and modify or recover, those transactions. So yeah, it's always important. I would suggest, if you want to go, beyond one more point, one more level, you can also start following up, 13-week cash flow or profit first strategies that we are recommending, our clients. So that will bring you to next level in order to, compliance and streamlining your procedure and save the tax, of course, the most. So yeah, these are really important points that you need to remember, throughout the year.
Thanks, Raj. You gave away a whole book almost, almost a whole book in this one answer. So what are the top three items here? Because I'm sure some of them were writing notes and then they just gave up because Raj was unstoppable today. So what are the top three items?
So top three items are, stay on your bookkeeping, right? You have to literally complete your bookkeeping every time. Literally, you have to continuously monitor your bookkeepings. Next, any document that you receive, whether it's from third party vendor, CPA, even from IRS or state government, wherever, right? You have to record and you have to maintain in your specific whatever, wherever you are maintaining, right? Separate out those books or those, documents year by year, right? So year wise you maintain a separate files for those documentation, because that will make it very easy whenever someone needs those documents from you, and you can literally provide. I also suggest if you can scan and put them into your computer, because that way you can literally, in one click send those information to your CPA or whoever need it. So yeah, these are the points.
Thanks, Raj. Shauna, you wanted to add something. I saw you raise your hand.
This is a big subject. Yes, and I love, Rajendra, you just hit on one of mine, save stuff in your computer. One of my favorite things to tell people is that every time you're at a store, right, or if you're making a donation, if you're at a medical office, any receipt that you get, take your phone. You have to build the habit. Take your phone, take a picture. Take your phone, take a picture of what you're donating. Take your phone, take a picture of the receipt of the office supplies that you bought. If you can get in the habit of taking a picture of absolutely every transaction that you make, if there's ever an audit, heaven forbid, but if there's ever an audit and the auditor says, great, show me the receipt for whatever, you go back in your photos and, oh yeah, on this day, on this time, and here's the receipt. Like, Here's the image and here's the clothes I donated or whatever. The other thing that I wanted to add, sometimes the question that we get is, when I can do my day-to-day bookkeeping, right? I can go in, I can upload the transactions, I can get my bank accounts reconciled, make sure you reconcile, right? Doing bookkeeping is not just getting the data in there, you have to actually reconcile your accounting, okay? But I can do that. I'm smart, I know how to do bookkeeping, that's fine. Where people get a little lost is when do I reach out for help, right? Because I think we all kind of know what are we supposed to do, track everything all the time, 24/7, perfect records. The number of people that actually do that, not so big, okay? But I think one of the biggest questions we get is, when should I reach out for help? When should I ask a question? And the number that has always been for years and years and years in my head is, if you are going to do something out of the ordinary, right? So it's not something you do all the time, but it's something new. And the transaction is either going to make you more than $5,000 or it's going to spend more than $5,000, ask. It doesn't do any harm to call your CPA, to call your tax strategy team and say, hey, I'm thinking about buying a car. That's a $50,000 transaction. How should I buy the car? Should I buy it in the business? Should I lease it? Should I have it bought through my daughter to get the best write-off? Like, how should I do it? And for me, I know that's not exactly document keeping, but they seem to tie really closely together. So I love sticking that $5,000 number in people's minds as a trigger, right? Take a photograph of everything. And if you're pulling out that credit card to buy something that's $5,000, should I check with the team? Just think it, should I check with the team, right? Okay, anyway.
Right. And there were two other items that Raj mentioned, and I'm sure majority of the audience would love to know what are these: profit first and 13-week cash flow. What are these? Tanushri, Shubham, if you would like to answer.
Yeah, so profit first is something, you can say it's a strategy, but it is also an habit which you need to develop. Apart from being it a strategy, so that at the end of the year, when you get alarming situation that, yeah, you have made so much of money and we need to do some strategies to save taxes or pay taxes if you have not done any strategies, then profit first will help you being cash rich at the end of the year. That is, whenever revenue hits your account, you put out certain percentage, reasonable percentage. We would would be 30%. That
wait, I just have to stop, because everybody right there, okay, did everybody just see that? Tanushri kind of, okay, let's back up, Tanushri. Let's be very clear, right?
Yes.
If you are a tax goddess client and you want to never have problems, never ever worry about money, 30%, which is a big number, 30% of your gross revenue, not your net profit, 30% of your gross revenue, every dollar you bring in, should be put in a separate account under the profit first method. If you do that forever, for the rest of life, okay, you will never, 99.99% of the time, I can't say never ever, it's going to happen. It has not happened yet in 20 years of Tax Goddess. If you do 30% of your gross revenue, the likelihood is very, 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 very tiny that you will run into problems. So no pussyfooting around it, Tanushri. 30%.
30% it is.
Yeah. If you do less than 30%, you're still going to be really well off. If you do 25%, you're going to be really well off. You might just have to come up with some extra little cash at the end of the year to do something, right? So sorry, Tanushri, go ahead. You were squirming. No. There's no squirming about the 30%. It's 30%.
Yes, it is 30%. So you put it aside. So that makes you cash rich at the end of the year to go and do lots of tax saving strategies, put it in that fund, and don't use that funds over the year. Just keep it for the last.
Ooh, we are not just helping people build good habits, but we are also asking them to stop all temptations, including me. I'm just thinking, what else can I not do to be as wise as you're suggesting me to be? Great. Cool. Shubham, why don't you tell us a little bit about 13-week cash flow? What beast is it?
Yes, as the name suggests, 13-week cash flow. It's a forecast. It's like a financial tool that you can use to predict your company's short term, I would say, short term cash flow situation. Like it can help you provide a weekly breakdown of whatever incoming you expect and whatever outgoing you expect for the cash over a period of 13 weeks. So, I mean, the benefit and advantage, I would say, is it offers a greater visibility of the whole financial background of your company. It helps you in monthly and the quarterly forecast. And we Tax Goddess have a 13-week cash flow special tool for you. You can visit our website and check that out. It's really great.
Thanks, Shubham. Great. Tanush, would you like to add something?
Um, Not exactly related to 13-week cash flow. Thank you, Shubham. That was really a good insight. I just wanted to touch over record keeping, because that's something which we ask, and this is something which is very, very important, which for which we do need backup, is somewhere when you have business and you have your personal travels, and you are using the same car for your business and your personal purposes. Please maintain a record keeping as regards to miles, the business miles, how much you traveled for the business. And accordingly, we can either claim that as an expense or we can bifurcate. So that helps in tax preparation and deciding what kind of deductions you are eligible for. So mileage, you can have these automated also, like Q Miles are some apps which you can use, or as Shauna said, you can take the picture and maintain a Excel sheet. That could be one of the ways you can keep the records of the miles. Then if you are going out on meals, if you are doing a client meals and you're meeting the client and having meetings with them, then maintain like for which client you met, which day, the purpose. So these record keeping will help us support if there is any audit in future of any kind. Apart from meals, then even travel, if you are doing what kind of travel for what purpose. So you should have those things in the habit, apart from taking the pictures, so that you just take the receipt, take the picture, put the note that for the purpose, whom you met, and everything. So as part of record keeping, and it also helps in tax prep and getting you more deductions.
And the accounting softwares even today offer like directly uploading the image to the software. So it will be easier for you. You just take the picture, upload it to the accounting software, and you can see that as an expense item in your books. So it is a great feature.
Right.
I think I've seen it on QuickBooks Online, right? Where there's a little plus sign, and so you can use the app and take a photo. Yeah.
Just for the records, no, this live Q&A is not sponsored by QuickBooks. This conversation just came up. We don't want any copyright issues, ladies and gentlemen here. So yeah, we will pivot. We will pivot now. But thank you. Today's call, it seems like we are, developing good habits. We are just building practices. So it's very, very insightful and valuable for anybody who's attending today, and for future people who are going to watch the recording. So great call, I suppose. All right. Moving to the next question. And this question, I think, Shauna, you should be the one answering this. Very interesting question. In the event of an audit, how can I best prepare and navigate the process?
So I'm laughing because we get this question a lot, right? We just came off the tails of talking about record keeping. Okay. I got an audit. I don't have any of my records. Okay. You will hate your life for the next 2 months trying to put together the records for the past 3 years. All right. So I do the face palm, okay, because really the best way you can prepare for an audit is to always be prepared. Always keep your bookkeeping up to date, have your documents, have your records, so that when there's an audit, the only thing you have to do is, okay, they want a copy of your mileage record. You go to your computer or paper or whatever, you pull up the mileage record and you send it. Okay. So how can you be best prepared? Document everything. Okay. And keep it up to date. And people just don't want to do it. So it's your choice. You can either do the pain every day for 5 minutes to upload your receipts to QuickBooks. Okay. Or you can do the pain for 3 weeks, trying to go back and recreate 3 years worth of history. and you won't find the receipt, and you won't have the mileage records, and you won't have these things, and you may lose deductions because of it. So that's a piece of it. The other thing that I would say right off the bat is don't panic. Don't panic. Okay. One of the biggest things that we hear is, oh my God, I got a letter, and like literally shaking, terrified that the IRS, I've actually had people ask me, are they going to send the police and throw me in jail? They're just auditing you. And I know just audits are not fun. Nobody wants to be audited, right? Like that's not something we strive for, is to be audited. Some people do. Actually, I should take that back, and I'll explain what I mean here in a second. But most of us don't want to be audited, right? Most of us want to just do what we need to do and not be audited, and we're fine. But if you panic, right? I've had clients, I saw the letter and I just couldn't deal with it, so I put it aside for 3 weeks. That means your team lost 3 weeks of preparation time, of discussion time. So you want to notify your CPA, you want to notify your tax preparer, you want to notify your bookkeeper, like notify people that are on your financial team, your strategy team, notify them right away. Like the instant you get it, notify them and say, and just ask, what are my next steps? What logically, what do I need to do? Go get this. Okay. Like let your team put you into, I'm going to call it go get it mode, right? Like go get this. Let's put it in the stack of paperwork. Let us help you organize these kinds of things. If you panic, you will only lose your own time, okay? And your logic kind of goes out the window, right? You have mileage records. It's in your phone, in the app, right? Don't panic. You have them. We just need to print them, right? So get your teams involved. Don't panic, and document early, in my opinion, right? Document as things are happening, because 3 years from now, you are not going to remember what you bought at Office Max for $150. You're just not, right? So write it down when it happens.
Absolutely. Raj, Shubham, Tanushri, would you like to add something in terms of stress management when you hear these kind of big words like audit? Anything to add?
Yeah, absolutely. So, when you are audited, they normally provide a document, right, that you need to, I mean, we are going to audit, on certain these things, right? Inside that document, normally they also provide which approach that you need to complete, right? There is a deadline, there's a phone number, there's an email ID, the information records that you need to provide within certain limit. The record also includes which kind of records that you needs to provide to them. So these all information are, normally provided inside that audit document, right? And it is highly recommend, not only recommend, but you have to always do that, right? That go through the document if you can read and analyze the document, and also provide a copy to your CPA, right? Who is completing your tax returns, so that at least they can identify some of the issues. Because we have seen sometimes IRS provides the audit, like they audit the clients and come up with zero change, right? Because they have all the information inside their books, and they have all the receipts and all these things. So sometimes they all, they reach out to you for a random audit. It's not like they have find something, but they just want to go through whether, you have all the records and everything, whatever deductions you have taken are really, according to laws and according to, deductibility and all these things. So don't panic, just reach out to them and start, working on these things. Now, when you make an approach to the IRS guy who is, doing your audit, answer their questions, indirect, right? So don't like, go here and there and we will provide letter information, all these things. Don't make reasons, just provide the information what they ask. Don't provide too much information, rather provide the information in a very organized way, like page numbers, the page number, there are, sections that, yeah, this information is for this section, even if you have 1,000 or 2,000, 5,000 pages. So create those sections separately and provide all this information in a proper way so that they can go through. Maybe you can also create an index. Yeah, these page numbers start from there to there and all these things. So it will make it easy for them. And once it's easy for them, it will, go through very fast. Yeah, they will find all this information, and it will make it easy for you to, get out of these audits. So yeah, I mean, no need to panic, as far as you are 100% sure, right? So yeah.
The more organized you are, okay, I've actually seen this happen in audits, okay? Auditor walks in, you're trying to cheat the system, blah, 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 like cranky auditor, okay? You hand them this beautiful binder, Beautiful thing. Tabs, index, highlight, stars, like organized that nobody could question. Okay. I have literally seen a cranky auditor go from being cranky to looking at 2 or 3 items and saying, everything's in order. I'm done. I'm dropping the audit. Less than an hour for cranky, Mr. Cranky, to turn around and become, thank you, actually said thank you. Thank you for making my job so easy. I'm happy I get to take the afternoon off. They don't want to be there as much as you don't want to be there. Make their job easy. Offer them food, offer them water, put them in a comfortable office. You hear people say, like if they're physically coming to your location, you hear people say, oh, I put him in the basement so he's cold and damp so that he like leaves faster. No, all you're doing is, all you're doing is making them mad. All you're doing is making them mad, right? And if they're mad, they're going to spend more time trying to figure out what you're doing wrong, right? Versus if they're comfortable and happy and they have a warm lunch that you bought them from the burrito place, whatever, right? Feed them, give them water, make it easy for them, let them finish their job as quickly as possible to get them out of your office. I love it. Regina, sorry, you just totally triggered me. That was perfect. Anyway, okay, good. Shib.
I think detailed record should be declared today's word of the webinar, because whatever we are discussing, detailed record is coming and is of essence.
100%. I think it's the world of being a tax person. I mean, the tax code is not a simple thing. If and or but, etc. And plus this, see Rule 17, this is detailed stuff, right? And it speaks to the fact that you need a detailed team on your side, okay? Your CPA better be detailed. They better be gathering all the documents. Your bookkeeper better be way detailed, like every T crossed, every I dotted. And it's one of the things, sorry to go on a rant, Shob, you totally, I love it. You guys trigger me on all these awesome things. It's one of the things that we get, Tax Goddess gets complaints about in a kind of positive way. Okay. And I mean, I'm sure how to say that, but we love to hate you, Tax Goddess, for how many questions you ask us, because we ask all the questions. And if you talk to any brand new client of Tax Goddess, they will tell you for the first 6 months, I thought it was the worst decision I've ever made, right? They had me do all these documents and all these questions and all these things. And then I saw my tax refund. And then I was happy. And I'm like, we get you the refund because we're detailed. So certainly it's my opinion that you need to have a detailed team, because if you're going to do strategy, right, you need the detailed back up. So, sorry, Shane. Go ahead.
No, I was just summarizing it.
Anushri, would you like to add something? Since everybody is giving tips, how to manage stress if you ever come under that big word audit, what to do?
Look at the audit letter, smile at it, cool down, reach out to your CPA. And if it's Tax Goddess, you don't have to worry, because we maintain a story behind each of your tax returns. And we expect that whatever you have given us, you have the record keeping. So if you are with us, we instill that you keep the record keeping. You should have these. So yes, do not stress. Audits are not that bad if you are prepared for it from day one when you prepare the return. So it all comes with habit.
Absolutely. And I, being a non-CPA, I'll give a very funny advice here because I've burnt my hands. Do not Google or YouTube and try to find a solution to this problem, because you will do more harm to yourself than good. Always reach out to the experts and let the experts do it. I've done Google and YouTube for multiple things in personal life and professional life, and I've destroyed my time and money and everything doing that. So this is an advice coming from a non-CPA, like a commoner. It's best to leave things onto the hands of experts. Okay, this question almost ate away the entire live Q&A today, but this was a very, very, very meaningful question. I think everybody wants to know, because that mere word audit has a very negative triggering effect, mind, body, everything. So I think this was a very valuable topic that we covered today. Well, whatever little time we have got left, 15 minutes more, let's cover as much as we can, because we have some more pending questions from the audience. Tanushri, the next question is for you. Can you explain the impact of state taxes on my overall tax situation, especially if I live in one state and conduct business in another?
Yes. So let me start with federal and state. There are two taxes where we have to consider. It's not only always federal we need to look at. There are always state taxes, which ranges from 2.5% to 9% at some states, like the most expensive state being one of the states in US, that's
I
California.
think California. Yeah.
Yes, yes. So on that side, so we have to make sure two things. If we are planning or if we are applying any strategies, some may apply at IRS level and may not be helpful at state level. So we have to make sure that we are making sure that state is also taken care. Second, at states, as you are as IRS has uniform laws all across, each state varies in its own kind, from taxation perspective, from triggering point that whether we need to file that state tax return or not, and if at all, how much is the threshold. So over here, we have to make sure that we are again record keeping. If we are present in several states, we are record keeping state-wise sales, state-wise expenses, so that we know which state has which expense or sales, so that we can also see which state triggers the filing of the tax return. We also need to make sure that when we are doing state taxes and we are doing and owning a business, whether we have employees in different states, because this triggers filing of state tax return apart from your resident state. Right? So coming at the second part, as live on one state and doing business. So if I'm living in one state, that becomes my resident state. And I am going to file in that state for 100% of income where I'm staying. But the states where I established nexus, this word nexus, that you have business and you are establishing nexus, economic nexus. I just want to bifurcate. There are two types of nexus. One is from sales tax perspective and one is from income tax perspective. Right now, I'm talking about income tax perspective. That is, if you have a business formed in one state, that is your registered state, but you're having sales in different states, that is income. So if we touch the threshold of that state sales income of that state, then that may trigger filing or that may establish economic nexus with that state, and we have to file the state tax return apart from my resident state. Second thing, situation could be you don't have sales, but you have employee in that state. Okay, you're paying payroll. So again, my economic nexus is triggered and I have to file that state tax return. Third, I have a branch office. I have inventory stored. I have some kind of physical presence, my office, or I have a property there. That will trigger my nexus irrespective whether I have sales or not. So there are three things which we have to see: payroll, property, and income, to establish whether we need to file that state tax return or not. Filing of state tax return will again bifurcate or apportion your income. Okay, that accordingly, your income will be bifurcated state-wise and you have to file the state tax return. At some states, your business will not owe any taxes. But at some states like California, Texas, Utah, to name a few, I've just on top of my head, they have taxes at state level for your businesses as well. Like pass-through entities, like even S Corp and partnership, which is not paying taxes at state level from business side, may have to pay taxes in certain states. C Corp that is the entity which is taxed on C Corp, has to pay state tax, but there are pass-through entities also which may have to pay taxes at state. Now, at federal level, just to add one more thing, at federal level, the state taxes are deductible. You can claim the deductions of the state taxes paid as part of a business deduction at IRS level, but not at state level. Right?
So I'm smiling, Tanushree, because otherwise, did everybody just hear effectively what Tanushree said? You need an expert to know this stuff. Sorry to recap, Tanushree, but there's literally, I mean, there's 50 states plus all of the cities. So 50 states plus districts plus cities plus localities inside the state, right? There are specialists that only do this kind of work. They're called SALT experts, state and local taxation experts. Tax Goddess does this kind of work. It is very specialized and can get extremely expensive. Because if you can't tell, in the brief overview that Tanushree is giving you, there are thousands of detailed records and laws and how they interact with each other. So sorry, Tanushree, but to kind of recap here, Brian, I think one of the biggest things is that if you live in one state and you're working in another, or you have a business in another, you need to talk to an expert. Okay, reading the rules alone, even us who are experts have to reread the rules often 3 or 4 times to make sure we're not missing something specific. It can be very deadly, and we've had cases where 3 or 4 or 5 years later, the state will come after somebody because that person didn't follow the rules of that state and there was some piece that was missed. So it is definitely something to be checking with experts and making sure that you're doing what is called a nexus study to make sure, is this covered, is it not covered, what do you need, what don't you need, and getting that information. So sorry, Tanushree, to cut you off, but I'm like,
no,
it's too much.
Yes. Yes, I think Shauna summed it all, that yes, when it comes to more than one state, contact, just keep the proper record keeping so that it makes the life easier for person to guide you well, and with checking all the laws that what states are triggered and which you need to file. So if you see getting into multiple states sales, even online, start recording sales state-wise.
I was going to say three items.
Right.
People,
Bill,
property, and
and
income.
some.
Right? You have to track all three, because we see these cases, especially on the East Coast, where, and I love that you mentioned online, Tanushree, because a lot of people sell on Amazon and don't realize they're selling into 50 states. You may have to file in 50 states, right? You may not, but you might have to, right? It's a big deal. We've had cases a lot on the East Coast where the states are very close together. And so somebody will live in one state, but drive across the border to work at your company. And so now you have a physical nexus presence in the other state you may not even realize, right? So people, property, or income. Property meaning, like, do you rent anything? Do you have any storage yards in some place? That kind of thing. So.
Wow, that was intense. Raj, Shubh, do you want to just skip this part and move to the next question, or do you also have something to add to the ladies?
I just want to add, very small thing. So if you see the overall thing, right? Federal plus state plus other taxes, all these things, only 3 taxes, federal, one state, and SE tax, the self-employment tax. It will cover your 62 point something percentage of income, right? So it's a big thing. And when it comes to more than 2 state, I mean, up to 2 state, it's still okay. But when it comes to more than 2 states, the complexity of the tax return is really very high, right? So you have to have an expert, in order to, implement and, fill up all the information. Now, normally CPAs in the same states have expertise, for that particular state, but when it comes to, multiple states, so all the CPAs doesn't, really don't have that expertise, right? Because normally states taxes is highly complex compared to federal side, because federal all the CPA knows, right? So yeah, in this case, you have to have, an expert knowledge plus filing and all these things. And when it comes to city as well, in the picture, it is too much complex, like a next level complexity is there, right? So if you miss a form, you just not need to, pay only taxes, but you have to pay penalties, filing, and they will open cases like 5 years back or whatever. So yeah, you have to be very careful.
Thanks, Raj. Thanks, Tanushree. Thanks, Shauna. It was an intense topic. Shubham, since the next question is meant for you, so I'll not let you speak on Nexus anymore because we have got just 5 more minutes before we end today's session. So, the last question for today. How can I maximize my tax deductions if I purchase a car or a house?
Okay, this is a great question to end the webinar with, because this is like the most Instagram worthy, or you can say TikTok worthy question. We have seen multiple reels for this
Multiple.
question
Yes.
itself, that can buying a car at the year end give me a whole write-off? So yes, I would say it's a very great strategy. First, I'll tell you in short how purchasing a car could help you. If you use the car for business purposes, like you can deduct the car expenses, you have the option to use the standard mileage or actual car expenses. But again, the word of the day, keep detailed record of the car's business use versus personal use. You can also get section 179 deduction. I think this was for one of the first questions that we discussed today. So if the car is used for business, you might qualify for a section 179 deduction. There are certain conditions that you need to comply and fulfill to allow you to deduct the cost of the car in the year of purchase up to certain limits. Then there is also a condition that goes around the gross weight of the car, which is significant for SUVs, trucks, and vans that is used for the business. So vehicles that weigh more than 6,000 pounds in GVWR, the Section 179 tax deduction allows businesses to deduct the cost of the vehicle as an immediate expense rather than spreading the depreciation over the whole several years. By purchasing a car nowadays, we know everyone is going after the EVs. So you, by purchasing an electric vehicle, you can get a EV credit. That depends upon the credit amount, basically depends upon the battery size and the year of manufacturing. So yes, please keep that in mind and confirm from your vendor, whoever you are purchasing the EV from, that you are eligible for the credit. Now let's come on to the purchasing a house section, which is also an exciting part. When purchasing a house, you generally know about the mortgage interest and the property tax deduction that people tend to get. You can deduct the interest that you pay on your mortgage up to a limit if you itemize it. Same goes with property taxes. Other than these two, you can also claim home office deduction. If you have a house, you can claim home office deduction in your business. If you use a portion of your home exclusively for business, you are eligible for a home office deduction, which could include a portion of utilities, home insurance, maintenance cost, etc. Any energy efficient upgrades that you make to your home can also be available. So any improvements that you make regarding these energy efficient or solar upgrades or solar panels, water heaters, they can help you in upgradation and getting credits. Then there's one more exciting strategy around purchasing a house is the master's exemption. You can claim master's exemption, Augusta rule, or as many people know about it. If you don't know about it, just contact us. We'll tell you in detail about the whole process. It is one of our juicy tax strategies to claim 14 days of free rental income without any taxation impact.
Ooh, what a befitting way to end the live Q&A today. Awesome. Anything else to add here to what Shubham said? Purchasing a house or a car,
I'm
other
not
than these
following up
being major
that
milestones?
act, man. He just said juicy, juicy, juicy strategy. No, I think that's the deal. Yeah, no, I think we're good.
Awesome. Cool. All right. Thank you, audience. You've been great today. As always, some of you have come once again to interact with us. Some of you have come for the first time. Do let us know if you like today's session. You'll be able to see this recording up in our YouTube channel. If there was anything that we could not answer today, please use the FAQ section on our website to post your questions. We will take it up in the next live Q&A whenever we come live. It's tax season, so we might skip the second week of April session for the live Q&A, but we promise to make up for it, and we will come up with a contest that's in works, and we will be announcing the reward and the way to participate in this contest soon. So it'll be a very, very interesting game for all of you to play, our audience, and get some exciting rewards. So we will keep you posted, and happy tax season. Bye. Thank you all.
Bye.
Bye.